TGIT, everyone. Alexander, how are you? Hugo, Jace, what's going on? FOMC next week. There's Paul and DJ and hey, Ryan, how are you?
Good morning, Dale.
Good morning. So, God, what a performance yesterday in the metals and the shares. But, you know, what's standing out to me today is actually have a gap down in oil. So, you know, to me, it looks like a correction's about to unfold here in oil. Be careful. Said don't buy it yesterday. Let's see what happens. Maybe we could get 76 oil here going ahead. Anything that you see in cable or euro here today, Ryan?
Yeah, unfortunately, it's looking a bit sedate in FX for the second day running. Just this is when it tests your patience, doesn't it? You know, you had the good moves last week. You know, bit of volatility, some little breaks here and there, something to jump on, something to fade, and then you get back in the ranges, and it's like, right, plot your levels, sit on the edges, wait to see what happens. But there's, you know, that's what markets are.
Strength on the board in fiat is Aussie. Yeah,
they had a nice jobs report last night. You know, coming amid, you know, the extra lockdown, so a little bit of a boost there. Aussie, I'm still favouring longs. I'm still positioned long, as you know. I can't seem to get above my average, which is around 72.56. Can't seem to hold above there for long.
Yeah.
You know, we talk about the prisoner that's and you use. Well, this one's walking the prison yard between the levels, you know, up to 72.20s, 72.50s, and then it comes down 71.80s, 70s, and it just walks around. You know, either we're going to get a breakdown through that 71.50 that you can see there, or we need to bust this 73.20 area, or we're going to just keep walking around, exercising.
Yeah, I was going to. And good morning, Ryan.
Good morning, Blake.
Hey. We miss you, man.
Well, sorry, I was nice to be back, but I needed to interject really quick because you know, wanted to talk a little bit about this Aussie today, Ryan. Now, you've been working a core position on the long side. You know, at what point do you throw in the towel with this particular pair? Because, you know, the way I'm looking at it is as a bear flag pattern, but I can't get excited about being bullish until it gets back above 73.50 and maybe even above the 200-day moving average. So what are you thinking here? I mean, where do you have to write it off and say I'm wrong?
There'll be a break of 70. That's my 70. My lowest entry is 70.10.
Got it.
You know, it's a huge level.
You've been playing this long since we dipped down there, and because I got long there too. But you know, this is obviously several weeks ago.
Yeah, but we all piled in, didn't we?
I'm sorry.
We all piled in, didn't we?
Yeah, we all did.
A few of us.
We all did. I didn't know that you maintain your long position. And you know, here's the difference between European traders and U.S. based traders. We have to abide by FIFO, which really sucks, and we can't work core positions like you guys can. I mean, if I'm going to trade in and out of the Aussie, just because I picked it up at 70 cents doesn't mean I can keep that one trade and, you know, navigate through some other, you know, different prices that I bought it. It just all averages in and then removes the, you know, first in, first out. So it really stinks from that perspective.
It's tough.
As a trader, you know, it makes you navigate through the markets a little differently than, you know, so when I get out of my Aussie and I took most of it off, I guess, when we got back to 71, you know, 71.20, 71.30, I forgot that you guys aren't necessarily doing that. So
no, I mean, my top entry is 75.12. You know, I started buying it when we were in the 75s, the usual FOMO. But this is a long-term plan. You know, as I've said before, I'm playing against the RBA and their 2024 rate hike call. I think they're going to be hiking well before that.
Yeah.
And conversely, you know, we've been talking about the dollar not being able to rally on all the Fed hawkishness. You know, again, that leans into being long something like Aussie dollar, because as we say, if the dollar isn't moving on the Fed and the other central banks are going to start moving, then you know you're going to start getting their currencies picking up as well. So, you know, to me, we're pretty much, you know, bang in the middle of the range between sort of 75 and 70.
If the market rallies, we could probably stretch it to what you're talking about, Blake, that 200-day around 74. That's possible up here, don't you think? There's a line
yeah,
right
I mean,
yeah,
200-day.
Yeah, the 200. So I guess I can take over the screen.
Oh, great! Because I was going through withdrawals without seeing your chart. So yeah, please do.
So no, there's the this is the reason why I'm so focused on the 7350 is there's the 618 retracement, right?
Nice.
And it's also the underside of this previous channel. You can see there's this channel, and this would be the flag pennant, top of the pennant. So, you know, if we get above here, yeah, we can maybe test the 200-day moving average. We really got to get above there before I can, you know, get really on board with being bullish. And then that would take us, you know, you could do something like this and say, okay, well, then we're obviously breaking out, right? So that's what would be more of a convincing move for me. And until then, I just, you know, I look at the Aussie and like, man, if it can't rally when risk is rallying, how's it, you know, we see stocks sell off like we're seeing if especially if the S&P breaks through 4,500, you know, Aussie could get a little ugly. But I've been long saying, and even I got asked to do this video for the trading battle that I did, you know, in December. I said, you know, my trade of 2022 is, if I remember correctly, at least the one I really want to make is a dip in the Aussie dollar below 70 cents. And I want to be long because I think that a lot of people are long down here at 70 cents. Look, I got long, Ryan got long, and I think a lot of people are going to let go of their longs below there, but I still want to be long down here. So I still want to be long, you know, below these levels if I can get it. So, but that's just, who knows? I'm just wondering, you know, why it hasn't rallied much. And, you know, at least we got a better jobs report yesterday, right? That has helped it out.
Yeah, I think you could level the same question as you are the Aussie, all the others. You know, why isn't the euro rallying? You know, why isn't the cable rallying more? You know, I think a lot of it is we're seeing a pull of the yen. You know, look at the crosses. You know, how are they doing? And you know, they're not looking as hot either. So I think the dollar is actually the least pulling effect on these pairs at the moment. And it's coming from elsewhere.
Let me ask you this, you know, since you brought up the yen, this is a conversation piece that I had with Ryan and with Chris Weston last night, during the trade-off episode, was about the yen. And guys, if you're wondering if I don't sound great, I am COVID positive, just so you all know. So if you're all wondering, like, guys, sounds like crap. What's that?
Unclean. Need the bell around your neck so we know you're coming.
Yeah, right. Exactly. Hey, I'm just holed up in my office now, you know, leaving everybody alone, whatever. But I guess here's something I should probably mention to you guys, just so you all know. Like, my wife got COVID. She got it before me, 2 days before me. And she's unvaccinated. I'm vaccinated. So we're going through the exact same cycle. And she's in, you know, like, you wouldn't know the difference if she was vaccinated or unvaccinated. It feels like the flu. So just for your knowledge, just so you all know. Anyway, I would say it wasn't really a big deal, but if you would ask me that Monday, I probably would have said, oh, this is a big deal. Yes, I was in the fetal position. Right. But I'm fine today. Anyway, minus my voice. The reason why I want to talk a little bit about the yen is because the yen is it stopped moving with this move higher that we saw in yields, and we saw the dollar yen, you know, scream higher, as yields were breaking higher the last couple of weeks. But with the move higher that we saw at the beginning of this week, the dollar yen failed to move higher with it, and it started moving with risk. So what are your thoughts with how the yen's moving? And I'd love to hear you guys' opinions on this.
Yeah, well, like you say, it's following the risk pattern, isn't it? We come through different waves of the central bank stuff. We had the Bank of Japan rumours last week, then that got squashed in the meeting. So yeah, I see a bit more range in here as well. I'd looking at Aussie yen, I'd like a little move maybe down towards the 82 handle. That looks like a decent support point down there. Looking for potential longs that serve as sort of a double purpose from RBA play and short yen play. It's ranging, and when you're stuck in these things, what can you do but pick your edges, pick your lines, and trade accordingly. If it breaks 82, then that's potentially a short to go with. Try the break down. But it's going to take a move above 84, 85 before it looks like it's turning around. It's
If I may add something. Good morning, everybody.
Good morning, Stelios. Please do.
Welcome back, Blake.
Thank you.
I just wanted to say we're in the situation where the Fed is hawkish and telling us about all these nice tightening actions that they're going to take. And then you have the BOJ. So Kuroda some hours ago said raising rates is unthinkable. And ECB, which one of the members was it who said that there's not going to be any rate hikes in 2022? So you have one major central bank, which is pretty much as hawkish as it can be. Markets pricing a chance of a 50 hike in March now for the Fed. And you have major other central banks like the ECB and the BOJ who are basically just saying nothing's going to change. Meanwhile, inflation is going higher. I don't know if you guys caught this. European CPI printed at 5%. So, from 2% to 5%, that's a pretty big margin. But we also got German PPI, 24.2% year on year. I mean, all these things are going to feed into inflation even more. And there's no way that the ECB and the BOJ can just stand there and do nothing. So I'm worried about the markets when things get so one way with one central bank and so the other complete opposite way with the other central banks. And I like these pairs now. I like the dollar yen. I like the euro dollar. I like the euro pound as well. There's more trouble in the UK. There's I don't know if you saw this, Blake. One of the Conservative MPs, Bragg, I think is his name, he basically accused the government of, Johnson and the Tory whip of basically blackmailing, Tory members, and if you support a no confidence vote, they're going to withdraw investment from your constituencies and give you negative press. I mean, obviously, this is what he's saying. Doesn't mean it's true, but this is not a good situation to be in politically in the UK. And what's the alternative? The alternative is Labour, and whenever Labour gets in power, that's usually not good for the pound. So,
but what does that have to do with? I mean, rate hikes. So, I mean, does that prohibit the Bank of England from moving on rates?
No.
Okay.
There's going to be, there is inflation in the UK for sure, and house prices are going up. Everything's going up. But when there's uncertainty, political uncertainty, that kind of tends to slow things down a little bit. I still think the Bank of England should be raising rates, given where inflation is and where employment is as well. But I think that might just hold them back a little bit. We do know how. Yeah, go on.
Oh, I was going to say, you were talking about all these expectations. I read that there's a bank out there that is expecting 8 rate hikes for 2022 from the Fed. Now,
wow.
I know. I mean, that's borderline ridiculous. And, Jim Welsh of Macro Tides, he said, which this last Friday, he said, he expects, the Fed to actually front load the rate hikes. And then this week, I don't know what major bank it was, Goldman or somebody expected, maybe that the first rate hike is going to be a 50 basis point rate hike, right?
Yeah. Yeah.
That's, I mean, what do you think? What do you guys think about the Fed front loading here? I mean, is that possible?
I think they could do, but I don't think they want to shock the markets. Why the urgency to do 50s? They can do 25, just keep doing 25s and gradually push this tightening onto the market. Why rush? I personally don't get it. Yes, Paul says JP Morgan said 6 hikes this year. It could happen, but why rush it? I don't get it. But then again,
that's the thing bugging me. As I said yesterday and last week, the Fed are quicker. They're rushing to get the balance sheet down. They're rushing to get hikes. They're rushing to NQE. What's the rush from them? And I don't think the market is worrying about
They
that.
don't want to take a hit on their bond positions.
Well, exactly. They got
right. How about that?
Funding to do. But then you look at the ECB. We ask about ECB. The whole point of the ECB's mandate is to get inflation higher. So why are they, when inflation is going higher, why are they not saying, yeah, this is exactly what we've been spent the last 10 years trying to get, and we've got it, and oh no, we're not going to believe it. We're going to ignore it. We're going to continue easing. So even when they've got exactly what they want, they're not going to change policy. It's like they're so sucked into their own narrative of easing that they don't actually believe that when they actually succeed in what they set out to do in the first place.
You know what's different to the last time, they were hiking aggressively, and one of our friends is saying, oh, they hiked 300 basis points in 93. There's a big difference between 3 decades ago and now, which is the huge amount of debt. And government debt and corporate debt and household debt and everything. And that is going to, if they hike rates aggressively, that's going to, create problems. So for everybody,
corner, haven't they?
Yes.
All right. Well, you know what? This has been a fascinating conversation that I wish I could get more of, but I want to turn the attention to this move that we saw in crude. It's been really interesting to watch. Stocks have been moving lower. We've broken some pretty key levels of support, as we came through the 4,600 level. That was a big trend line that we'd been following. If you guys, following my charts, especially those of you that listen to the Morning Edge, know that I was really focused on this trend line. We broke it, earlier this week. Now we're, into the what I call support zone, because this little blue line right here, that's the neckline of the inverted head and shoulder pattern. Now, it depends how you wanted to play it. And remember, I had it drawn a couple of different ways. We played it, through, this is the, it's like a major horizontal breakout point. So my opinion is, we get through here, it's around 4,500 in the S&P. You got the 200-day moving average is just below that, but 200-day moving average is really just an average. Doesn't necessarily mean it's going to be support. I think that 4,500 is pretty critical. But what's really interesting is you got the S&P that is coming into pretty key support, and you've got crude that continues to be really strong. Now, yesterday, we had this reversal candle in crude, failed breakout, but I'm really focused on, see this blue line and the previous highs.
High.
Yeah, these little highs right here. We get a daily close below that, which is basically 85.20. I think crude's going to be in for a nice little, it's going to play catch up with risk. And I think it caught a lot of people long yesterday. I saw nothing but everybody was being, very bullish, and crude was, those bullish crude calls were coming out yesterday. So what do you guys think about crude oil and its move with risk right now?
I personally, I've been looking at this. I think if these highs from October get taken out, and if we get a weekly close tomorrow below that 85.38, I think it is, then I think we're going to easily get a move lower towards maybe that 61.8 that you have there, which is what, 76. We could easily get $5 or $10 lower. I mean, how
I agree with you. It'd be a nice little 10, 11, 12, 8% correction, something like that.
How much of this rally do you assign to the geopolitical risk going on, the Russia-Ukraine stuff?
I don't know. I don't know. What do you think?
I think there's a large element in there to do with that.
Yeah.
just, you know, the natural thing. If there's a major conflict brewing, you know, oil gets bid, yen gets bid, Swissy gets bid. You know, I think maybe oil was seeing a little bit of that going on.
Yeah, but we've seen this whole, you know, situation in Russia, Ukraine kind of percolating for the last several months. I mean, why now? I'm asking.
Just because it's increasing. I mean,
because Biden gave him a green light yesterday by saying, well, you know, little incursions, no big deal.
Yeah, we might
throw some more sanctions on you know.
But meanwhile, the UK's doing regular flights of arms to Ukraine. You know, other countries are doing too. They're all supplying armaments along the borders. It's growing slowly. You know, also we can't overlook the fact that largely we're coming out of the Omicron phase pretty unscathed. So, you know, that's another boon for growth, which is obviously a positive for oil. So there's two factors, as always, two sides to the coin. But I think some of this rally has been just geopolitical tensions.
Yeah.
Which, if they get solved, then you're going to get, you know, that could well be the trigger for your dip lower.
Oh, well, that makes sense. You know, and I think what we should be looking for, if you guys are going to play this on the short side, you know, look for a, you know, I'm going to draw it out for you here. You know, look for a red daily candle. If it looks like that, you know, we call that dark cloud cover, you know, on a shooting star. That's the recipe for, you know, a false breakout. That's a recipe for a nice, let's call it 5, 6, 7% correction from
pull up
from
the
those
weekly,
levels.
Blake. Pull up the weekly for a sec.
Yep.
Look at that RSI pattern.
Yeah, I mean it's divergent. Excuse me.
It's under 70 for the first time at a peak, and it's 1, 2, 3rd non-confirmation this year. So, you know, anyway.
Yeah. So I mean, what would you be thinking, Dale? You'd be fading that?
Yeah.
Right.
Yeah, or at least be, you know, everyone's loves the oils, been long the oil, and yeah, there could be a geopolitical event. Maybe, you know, we spike and top on that, but to me, all those non-confirmations at the minimum means take profits. If
Very
you've been
good.
long.
All right.
Okay.
Yeah, no, I think that makes a lot of sense. All right. Well, and you know, one of the things I wanted to, you know, I'm going to circle back over to the real quick. I want to circle back over to the Aussie. You know, I've been looking at the Aussie New Zealand, and you know, when you were, you know, we were just having this conversation earlier with Ryan about talking about the Aussie dollar and how bullish you were with the Aussie. I've been looking at the Aussie Kiwi, and I'm a little remiss that I didn't pick it up, and I've been meaning to be long as it was above the 200-day moving average in this consolidation. And actually, if you even excuse me, you read my analysis last night in the here, let me take you over to ForexAnalytix, by the way. Let's go to the Aussie New Zealand. You know, my analysis last night is a break above the 106.50 level, showing the Aussie following the Aussie jobs report would be a bullish event. And I didn't buy the Aussie yesterday. I've been meaning to buy it because we've been consolidating over the 200-day moving average, and that consolidation was just aching to break higher. So I guess the reason why I bring that up is if you want to be bullish the Aussie, there are different ways to play. You don't have to necessarily, you can pull the dollar out of the whole equation if you want to. So that's another, you know, that's another thought for any of you guys, you know, that are playing the Aussie as well. The Euro Aussie is playing up towards the 618 retracement. So let me ask you guys this: what else do you have on your radar this week today? Sorry, guys, I'm still in COVID fog right now.
We've got a bit of data coming out. The Philly Fed might be interesting after the Empire State dump on Monday. That sent a few shockwaves through the market. I know our mate Brent Donnelly had something to say about it. You know, the data is looking like something might be happening untoward. So the Philly Fed manufacturing might give us a little bit more idea into that. You know, obviously this all comes before the big PMIs and stuff. Initial jobless claims as well. We're coming out of the New Year period, so you know we'll get to see if the jobs market's going to get back on track as it was before. If there's any little shakeouts going on in there. But that's about it on the data front today.
All right, Stelios, anything? Oh, by the way, Stelios, I meant to mention, gold and silver.
Yes,
ripped. They ripped out. They came out of their shoes yesterday, and I think it was gold that really broke the 618 retracement above the 1830 level. Not everybody that watches my analysis daily, they know that this is the bigger range that I've been looking at, but we broke the 618. That opens the door for the upper end of this range again. But silver, nearing the 200-day moving average. What are your thoughts on
silver led the move. Apparently there was a huge order in Europe yesterday, and the day before as well. It was outperforming, but we were all waiting for gold because gold was lagging. But gold passed that resistance. I had it around 1835, between 1830 1835. So I think if we dip down back close to 1830, I think it's probably a good place to get long. But I don't think, you know me, I'm a bull. I already have a position in silver, gold, and miners. And miners, by the way, yesterday, especially the junior ones, the ETFs went like 9%, which was nice. I want to add, but I don't think bulls are, we're not out of the woods yet. I think there's still a risk for a leg lower, but this is very constructive. In gold, we need to see us take out those highs 1910. Really, that's the signal for me that we're gone basically. But it is constructive. I am looking at price action, but as I said before, I'm still not pulling the trigger. I've said this for so long. I'm going to add either a lot lower or on a breakout higher, and I just want the technicals to confirm the breakout and before I add more. But
and let's make sure we clarify for those of you guys that if you're newer to listening in, you're not going to ever hear Stelios bearish gold. So just just kidding. I'm laughing and it hurts to laugh. Hey guys, I want to say,
you need to take the rest of the day off, my friend.
No, we got the morning edge coming on. Speaking of which, really quick, guys, if you are not part of the ForexAnalytix family, look, even COVID positive Blake, I come to join the party. So come join the party. At least we're online, so that's a good thing, right? I can just be holed up in my office for the next couple of days as I self-quarantine. But that doesn't mean that I have to hole up away from the chat room. So you guys want to see what our chat room's like? This is how active it is in the chat room. And this is from when I got up this morning. And I'm telling you right now, there's nothing going on. And the markets are really quiet. But this is from the time that I got up. This is just the general chat room, right? And you can see. And we do
disinfect it every time Blake comes in.
I do. Everybody's got to put on there. Just there's the Forex Flow room, which is going to be named. What's the Forex Flow room going to be named?
I think we'll change to Flowonomics.
Flowonomics. I love it. The Flowonomics. Wow. We have a news and research room, and then we have our trades room where everybody likes to put their what trades they're doing and where they're getting long and short, and then we have a Spanish chat room. So that's what part of what you get with ForexAnalytix, which we have a special pricing that we only do at the beginning of the year. So take advantage of it. And a lot of people wait around for this because the next time you see this price or somewhere even close to this price might be 6 or 8 months from now. So take advantage of the pricing that we do when we offer it. I just need to throw that out there before the data comes out. So really quick, data's coming out. What are we looking for, guys?
Results.
Oh my gosh.
Philly Fed, we're looking for 20 up from 15.4, and jobless claims, the usual 200 odd K, 220.
I'm going to keep it on the dollar yen here and see any type of reaction that we get.
And also the components of Philly Fed are important. Prices paid, employment, new orders, all that is worth watching.
All right,
also get the crazy Canadian ADP, which is basically finger in the air, pick a number and then reverse it the next month.
and by the way, guys, this is the data flash is included with your ForexAnalytix subscription. It's a nice way of being able to see the data as it comes out.
Oh, this is nice. Anthony said Studio 54X. That's a good name for a chat room. Okay. Very nice, Anthony. Very nice.
We know his lifestyle.
He's Greek. He has a good sense of humor. Okay. Jobless claims are higher than expected by about 60K, but it doesn't matter. Let's see Philly Fed. It's not out yet.
Yeah,
doesn't that matter? I mean, when's the job picture start to turn a little bit, and
23.2 for the Fed.
Okay, so that's a beat.
Okay, I'm not seeing.
And let's have a look at the components as well.
So markets are taking it with stride, and look, we're I'm surprised the FX market is as tight as it is, as calm as it is. With equities as as weak as they've been the last few days. I've been a little surprised and surprised about the price action, but just when you fall asleep
the VIX is only 22 with all this carnage.
That's another thing. That's a great point, Dale. I was looking at the VIX yesterday. I'm like, when's the VIX going to pop its head above 30? But yeah, we're sitting here. And
by the way, guys, Philly Fed employment down from expectations, and Philly Fed prices paid quite a bit higher than expectations. So lower employment, higher prices. And not a good picture.
Flagflation.
No. I was going to say, what's that say, Dale?
Flagflation.
Flagflation.
Bear flag.
Bear flag. Yeah, no one likes to hear any of the stagflation type of commentary come from anybody. So, hey, Dale, I want to say have a great interview, and everybody, thanks for joining us today. Nice to be back, and excuse my voice, and I'll be back more in by early next week. I'll be back full force. So, Dale, I'm going to pass it over to you. Thanks, Stelios, Ryan.
Cheers, guys.
Everybody.
Feel better.
Thanks, everybody.
Feel better. Carley Garner, welcome back to F.A.C.E. You made some great calls last time. In fact, every time you've been on, you've had some nice option positions on. And I'm going to ask you to say hello.
Thanks, Dale. It's good to be here.
Hey, Carley. Yeah, you made some nice calls last time. I think it was near where silver was near the lows, and the bonds made a move on one of your calls, and had that big break in crude that happened, and here we are at new highs. So I'm interested in what's on your radar now, Carley. If you could share your screen.
Sure. Yeah, let's do that. Sorry.
Carley does options, futures options, and executes different types of options, strategies, verticals, calendars, all kinds of things. So, okay, what are we looking at here?
So, right. So I'm a little sensitive to trading futures outright. Emotionally, it just totally wrecks me. So options is the way I like to do it. You have a lot of more room for error. You can make money either. I mean, assuming you're semi-right, you can make money either through time value erosion or direction. So that's why we go that route. It's not perfect. They can get in the way, even if you're right. But so this is a trade that we did a couple of weeks ago in silver, right around when silver was sitting on we were talking about your previous host was talking about silver.
Yeah.
So we put this trade on. This is an idea of some of the option trades that we do. It's basically a bull call spread. We were recommending to buy the April silver 23 call, sell the 24 call, and then sell a 20 put to pay for it. I don't remember the exact fills, but I think we got in for 5 cents, something like that. So $250, and you get all this leverage. But the downside is, I mean, obviously silver is above 24. We're making money. We made money on these two legs of the spread. This leg is losing money, so it's getting eaten into our profits. If we hold tight and silver stays above 24, assuming we hold all the way to expiration, which we rarely do, but if we did, a trade like that would pay off just under $5,000 because you have to account for what you paid to get in. So now today we're facing, what do we do? I've been friendly to gold and silver here for several months, and they just had, every rally has fallen flat. So I don't trust it yet, but I do think that at some point this year, silver is probably going to the high 20s, let's say 29, maybe even 30 is my guess. We'll probably be putting on some sort of a ladder today, because if you do like the idea is we've seen silver every other time it gets up here. I mean, it just kind of craps out, right? So you don't want to have a lot of downside risk when the market's in an upswing. So what we might do is just to add to our exposure.
And how about covering the put part of the spread?
Yeah, no, that's exactly right. So we've actually, most of our clients have bought that back because it's lost most of its value. And when you sell a naked put like that to pay for a trade, it works wonderful if the market just goes your way, but it's unlimited risk. So if it would have broken support, we would have had to defend it, maybe sell some mini futures against it, maybe get out and just take the loss, whatever. But luckily it went the right way. But now we're in a situation where we want to be long silver and we're already maxed out. So we'll have to put something on that doesn't have a whole lot of downside risk. We'll probably look to do something like buy a 25 call. I'm not even looking at prices. I'm just kind of, might be something like buy a 25 call, sell a 26.5, and then maybe sell like a 28.5, 29 to pay for it. So we can get in using the market's money while calls are expensive. And then our risk would be on the upside, but it'd have to be a pretty big rip and we should be able to defend it by that. So that's kind of what we're looking at today.
Okay. They call these risk reversal trades when you put them on. Is that what it is?
Well,
because you're selling the put, you're doing the vertical call spread, but adding the sale on the put.
Yeah. So there's honestly, there's no right or wrong name for an option spread. It depends on who you talk to. Like guys in New York call it one thing, guys in Chicago call it another thing. Okay. But this is basically, this is a risk reversal here, this part of it, buy the 23, sell the put. And then so what I call this is a bull call spread with a naked leg, because it's basically buying the 23, 24 call spread and then selling a put to pay for it. But honestly, there's no wrong answers. It's whatever you want to call it.
Well, congratulations on that trade. Nice.
Yeah, that one worked out. They don't always work out that well. We had something pretty similar in gold. I don't know if I have it here, but basically the same idea in gold that we did. So that one worked out as well. But gold's going to be pretty interesting. Your last speaker mentioned this. We're coming up. This is a weekly chart, by the way, and gold is either. Personally, I think we do break out and head higher. I think one thing I've learned about commodities is if any particular commodities have a really terrible year, then the next year they probably do pretty well, and vice versa. So, for example, in 2020, crude was the dog, and guess what? 2021 comes along and now crude's the star. I think gold and silver were the dogs last year. I think they're going to shine this year. And actually, I think crude will probably fall on its face, but we'll see. Time will tell. But I think that relationship is going to flip flop here. So we'll keep an eye on that. But
you're doing anything with stock indice options, SPYs or S&P options? Anything in the market with this recent sell-off?
So I have a few trades on the side that we've done for clients. I haven't put anything out like on our newsletters or anything, just because it's a pretty tough market. I don't want people that don't have the money or understand it to get in and get hurt, because this market can really rip your head off if you're in the wrong direction. But we basically did something similar yesterday. Like, fundamentally, I still think the S&P is a little rich, but if you look at this chart, it's hard to deny we're in an uptrend. Hasn't really paid off to be an uber bear this year, or for the last couple of years. So we're kind of expecting this level to hold somewhere around 4,500 to 4,490. Now, if this breaks, honestly, I think it could get really ugly. I know there's some support here around 4,300, 4,260, but I actually did a segment with Jim Cramer maybe 3 weeks ago. No, about a month ago. And we talked about like one last hurrah rally, and then possibly, let me see.
Another new high?
Well, we talked about another new
failing
high.
rally. Oh, another high.
I think this was around mid-December, and we talked about it was right around this time. And we thought the market would hold here, and then we'd have one more rally, and we did. And then we also thought it would roll over, and it just happened to do that. But in that original analysis, we were expecting it to just kind of melt down. And honestly, hate to even throw this number out there.
3,400.
In the high 30s. Like, I was looking more 4,000 to 3,800. It's not impossible. I know we want to, it's hard to imagine, but Trust me, markets do things you can't imagine. They do it more often than you'd think. And honestly, we're really due for that kind of a route. So you want to be real careful.
I think we might pop to 4,700 first.
You
and
could
then
be right.
I'd lay them on. If that happened.
I agree. This market, it feels different. It's not the same as it was, let's say, 3 months ago.
It's a different Fed.
I think you're right. I think that big rallies are probably places to get aggressive on the downside.
Until he changes his mind again, which he's done a few times.
Right.
Hasn't he? I mean, he's not using the dial anymore. I heard someone say it's a light switch. You know, he's just turning it on and off. So
I know. Yeah, that's a good point. I mean, it was slow, and now hurry, and it's chaos. Yeah.
So what else is on the radar now? Something you're looking at? Anything in the ag commodities? We had a big break in grains, and they all came back pretty good.
Yeah. So
corn.
This is corn. I don't think I have the trade. I don't think I have a chart of the trade we put out. But anyway, we're looking for, honestly, fundamentals in corn are pretty good. We've got some issues in South America that are suggesting tight supplies. The trend is up. I think last year kind of paved the way for higher prices and for people to get comfortable with that. We've been consolidating here. So, I mean, I think we've got bullish option spreads on in corn. I think we're going to probably trend along this nice little channel here. So I'm not saying we're going to $8, but I'd say the path of least resistance is higher, and I like the upside in corn. Same with soybeans. We've had a nice little rally here.
Bottomed around the harvest.
Held support. That's good sign. Looks like I'll probably just redraw that, but looks like we're putting in a little bit of a pendant. And I'm looking for beans to get somewhere in here. So $14.75, $15. You probably don't want to chase this. I mean, with futures, because this is what beans can do when you buy late and you're on the wrong side. So you don't want to do that. But again, we're playing it with option spreads so that it's a little tamer, but I do think we're going to 15, 14.75. So you don't want to be short, I don't think.
Anything in the currency arena?
We've had a tough time with currencies. We've been looking for a euro bottom here, and it just cannot get anything going. I do think that the dollar has topped out. Let me find my dollar.
Okay, so then you probably think the euro is bottomed then too.
I do. The problem is, sorry.
That's okay. Are you laying in any kind of bearish positions in the crude with it taking out the prior high that we had about 2 months ago?
Here we go. Can you guys see that? I'm not sure. It's on a different window. Okay.
Well,
all right.
We see all the different symbols.
Okay, you don't see the dollar chart?
No.
All right, let me fix that.
You have to stop sharing and then reshare, I believe.
Okay, let's try that. Does that work?
Oh yeah, there's a dollar.
Okay. All right. So I do think that the dollar has rolled over. It's been very quiet, not getting a whole lot of attention, but it is kind of holding this downtrend line. Let me pull up the weekly chart here. The weekly chart we'd pointed out like 96 to 97 is basically the area that used to be support. Now it's resistance, and it held that. We really need to see a break below 94.50. If we do that, then that confirms to us that this dollar rally is temporary, and that's going to be kind of a game changer for commodities. When the dollar starts selling off, I'm not saying we're crashing, but I think we could easily get into the low 90s. Yeah, I have heard that theory.
There's some big calls for like 30% off. The death of the dollar has been called before, but why not something equivalent, Carley? Say from that COVID high, we went from 103.
Yeah, this was crazy up here.
So how about 13 from wherever we peak is going to take us into the 80 range?
Sure. Yeah, we could easily do that. Here's what a monthly chart looks like. It wouldn't be, especially with the the economic cycle and the interest rate cycle and all that stuff going on, would not be shocking to see 90s. If we break below the 87 area, then it could get back down here. And if I don't know if any of you were trading back in this time frame, like in the 2010, 2014 area, the weak dollar.
Oh yeah, Carley. I was trading when I had a ticker tape under glass was my technical tool.
You've been around a while.
Yeah. So go ahead.
When the dollar gets like, this is kind of the range. When the dollar's trading between 70 and 90, as it was back here, as opposed to what we've seen lately, which is 90 to 105, this kind of opens the door for commodities and risk assets to literally just like rally without any cost.
They've been doing pretty well in the face of a stable to strong dollar. What's it going to be like if the dollar rolls over?
Yeah, so that's really
like
something
gasoline
to keep an eye
on the fire, inflation fire.
Exactly. Yep. Okay. So it's something that, who knows? No one has a crystal ball, but it's definitely something to watch. And it's interesting. I don't see a whole lot of commentary like business news and stuff about this dollar slowly rolling over. So we'll keep an eye on that. You mentioned crude oil. Let me go to. All right. So we had a lot of clients that really wanted to be long crude oil, but they wanted to go long like way up here, which is a bad idea. So we recommended yesterday and actually we were on Bloomberg talking about the trade, to do call ladders. I'll see if I can find the chart in a second, but here's what my guess is in crude. I know everybody's calling for $100 oil, and everybody and their dog also thinks interest rates are going the 10-year yield's going to 2%. But the reality is trading is a zero-sum game. And if everyone thinks the same thing, they can't all be right. And that's just not how it works. So my guess is we probably roll over in oil sooner rather than later. Momentum probably takes us to 88, maybe even 91. So I'm not saying we turn around on a dime, but we're getting to the point where small shale oil producers are just licking their chops trying to get supply online. Last week, the Baker rig count went up 11 units, which is the biggest jump we've had in a couple of years. So it's taken a long time, but the US producers are going to start reacting to these prices and bring supply in. They probably, like the big producers, like the big publicly traded companies that we all know, they're basically sitting on their hands. They've kind of almost become a member of OPEC and are just like towing the line. So that's kind of scary. But there's some small guys out there that, they've got dreams and they have kids to feed, and they're going to be doing what they can to bring wells online. So they're just
looking for gushers.
Exactly. It'll happen. We have, we have the oil. We just need to get it out of the ground. That's really what it is. Let me take a peek.
Would you construct some type of, you're probably not doing it yet. You're waiting for that black line that has confluence there.
So this is right. So this is a weekly chart, and this kind of shows that we do have potential to go to 90. And I think once we get to 90, it'll be one of those situations where literally all the buyers are in because everyone's got their mind on $100. And when that happens, when everyone's already in, you just run out of buyers, and fundamentals really don't matter. Regardless of your fundamental opinion, it doesn't matter. If there's no buyers and prices slip. We did do a trade yesterday on this. See if I can find it here.
All right, so we've had a lot of looks. We had looks in metals and the dollar and energy and stock indexes. So it's okay if you can't find that, Carley.
I can't find it. I'll just kind of tell you what it was. Basically, it's a way to get into. So to be honest, we started playing the downside a little early in this, so we're kind of caught up, and we've been hedging with long futures and stuff. So sometimes, originally I didn't think it was going to break above
a new high. I tried to sell the retracement after the first break too. I tried.
Yeah. So we were a little early. We were hedging, but I still think we're fine. We have, like, for example, some short calls way up here, and that we're just kind of hedging with long futures is what's going on. But anyway, we put on a trade yesterday. It's actually a bullish trade, not because I think oil's going to $100, but one, it can act as a hedge for anyone that's kind of caught on the wrong side of this, or we have a lot of clients that want to be long oil, but the average trader trying to buy a future up here is going to get run over. I mean, even if oil goes higher, they're probably going to get stopped out, or they'll just be the last buyer and things are going to go ugly. So we gave them an idea to buy. And again, I talked about this on Bloomberg yesterday. I gave the same trade. We were recommending to buy 87 calls for May, and then selling 92 calls, and then selling 97 calls. So basically going long a call near the money, and then selling 2 calls above to pay for it. And some people think it's crazy to sell oil calls, but if you look at the option chain, the options have already kind of priced in. Oops. Hopefully you didn't see that. The options have already kind of priced in continuation of the rally. So even if the market does continue up to the 90 area, those calls probably aren't going to gain that much value because they've already accounted for that. But we'll have to see.
Okay, Carley. So some great looks. What's the best way for people to follow you, get involved with you? I know that you have your own IB and you mainly trade futures options. So if that was someone's cup of tea and they like your analysis, you could show your website, and if there's something you want to,
all right,
so people know where to follow Jim Cramer's technical friend, Carley Garner. So
yeah, thank you. All right, let's see here. So we are dekarleytrading.com. We're basically a boutique brokerage. Sorry, you should see my website now. There we go.
It is. Yeah.
So we're a boutique brokerage. We offer futures and options trading. We don't offer stocks. We only do futures and options. We specialize in that. And just like any other brokerage, we'll provide you with a mobile trading apps so you can trade from your phone. You'll have a platform on your computer. But the difference with us is we actually answer our phone. We can answer questions. We can help you. And we also provide trading commentary and guidance. So if you go to dekarleytrading.com, you can sign up for a free trial of our newsletter and just kind of see what we have to offer.
Okay. Who do you clear?
We're a branch of Zaner Financial Services, and
that's right.
They're an independent IB. So we clear through a handful, but almost all of our business goes through Gain Futures and StoneX because we have a good relationship with their risk managers, and we can trade options and things like that. Not all risk managers at brokerages want anyone trading options. It's a little more work
if they
for
write
everyone.
them. Yeah, they don't like
exactly.
If you buy them, no big deal.
Yeah, so, if you're trading spreads or it's not a popular strategy, and it's if you're responsible about it, it's not any more dangerous than the other type of trading. In fact, I argue it's less dangerous. However, not everybody's responsible, and it does take a little more work for brokerages to manage risk, and not all of them understand it. I know it's crazy to think that somebody making $300,000 at a brokerage to manage risk for their firm doesn't know how to option trade, but trust me, that's common. So it is what it is.
So we have a labor shortage of margin clerks too.
Yeah,
so
they just don't understand
supply
options.
chain. They don't make them like they used to.
You got that right.
They, bring it on. Bring on the risk. We'll blow you out if you don't meet your call. That's all. Or break your knees. I think there were threats of kneecaps being broken. So let's see that book again, Carley. Let's see that book.
Okay. Let's see here. Where was it? Okay, so this is Trading Commodity Options with Creativity. This is my latest book. And if you're interested in option trading, the ladders and all that kind of stuff we talked about today, that's a good start.
Where can people get it?
It's available at any major book outlet, but Amazon's generally the cheapest and easiest. So,
okay. So, author and natural contrarian, Carley Garner, thank you again for being with us today and sharing some ideas. You always bring some eye-opening things to consider, and I like options.
Yeah,
I'm like you. Because you don't have to be right the same day.
Exactly. And to me, it's just less stressful, and any less stress you have in this game, the better.
not that I haven't lost money at times in options. In fact, there isn't an arena I haven't lost money in at one time or another. So,
Sure.
but I like the fact that you're not going to get stopped out. You could be wrong for a day or a week if you buy enough time, and if you have direction right, you're going to get paid and not picked off. And then if there's a massive move, it's only the selling of the options that can cause you some problems. But great presentation again, Carley.
Thank you.
I hope 2022 is your best year ever, not just in the markets, but in every way.
Well, appreciate it. The same to you.
All right, Carley Garner, everybody. So, if you want to learn about options, futures options, Carley's a person to talk to and learn from. All right, so that's a wrap, everyone. Remember, don't just count your option spreads, count your blessings, and we'll see you tomorrow for a wrap up of the whole week. And I hope we're adding value and by bringing in great people like Carley. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.